We're looking at the Aussie US dollar 60-minute chart, and on this recent price swing we saw a rally, then a retest of the rally high. Price has retraced to the from this swing low to this swing high. Price has retraced 50%. For some reason on the Aussie dollar and the British pound, they love the 50% retracement, and don't know why exactly, but it is a very common retracement level for those two US dollar crosses. And let's just look at this a little more closely. We had on this upswing, price tested this previous high over here and retested it, then retraced its 50%, has consolidated somewhat and started a leg up. Now we're going to take our retracement level and just have a look to see what happened on this price swing. We retraced. This one's a tough one. It was tradable, but you see this level of resistance here. Price did not get all the way back to the level of resistance at 74.80. It came as low as 88. The 50% retracement is 85, so within 8 pips, if it was me and I saw these candles coming down towards this level, I know myself, and I would want it to come a little bit deeper. I probably would have missed this trade for the sake of two or three pips maybe. It just depends, because here we're in the height of, we're well into the European session and getting into New York session here, and I probably would have missed this trade. In any event, we took a leg up to the 127% extension just within a few hours. Now let's move forward. As we see that this high has formed, where are you going to look to find your next level of support? Well, naturally we're going to look here. We'll just draw this line here. Now what we would do is we will draw our Fibonacci's from the last swing low to the last swing high, and we see that it converges with this high right here. And remember that Fibonacci, that the Aussie dollar likes the 50% retracement, but I'm inclined to trade it closer to this bounce right here, as there's only a difference of 75.43 and 32. It's 11 pip difference between the two Fibonacci levels, so you can really, you've got some room to trade it at the 38%, or you can maybe trade it at the 50. But this level of resistance will override the Fibonacci levels, but the fact that it converges is positive for us. Now we'll watch price retrace down. This is about where I would like to make my trade, is right here, as it stares it right in the face. Now we're consolidating above the level. It drifts through by 8 pips. Now it starts to rally, and it moves as high as 65, so it's moved 43, 43 and 45, 65, so almost 20 pips. And now we get our move. We probably would not have got paid on this surge. You might have if you got a good fill, but if not, you have to endure these retracements. And I just want to show you This is quite important here because on a smaller time frame, on a 5-minute or 15-minute, you would see this. You see how price moved through this distinct level of resistance here and it became support and then rallied? That's important because when you're watching and managing your trade on a smaller time frame, 15-minute or a 5-minute, that level is definitely important. And then we see price rally from here up to the 127% extension.